Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Tuesday, October 12th, 2010. This morning we're talking about the Fed mystery. Now what I mean by that is what's the Fed going to do today? Today is FOMC meeting day, 2:15 Eastern Standard Time. Bernanke and company, they're going to come out with their decision, what they're going to do with rates, and potentially what they're going to do with quantitative easing. Now, the market has been expecting some quantitative easing for some time. I refer to it as QE2. You've seen it a lot in the blog, so this is kind of what the market's been banking on, and this is what's really been driving markets as of late. It's dollar weakness. With dollars weak, money pours into everywhere else. So you see that it's going into euro, into Aussie, into stocks, into commodities, you name it. Gold's at a all-time high around 1350. So that's what's been happening going forward. But yesterday, some Fed officials were speaking, and they actually came out with some surprisingly hawkish comments. Now, it's not to say that they're going to raise rates, but now it's got the market thinking that perhaps they're going to back away from quantitative easing. So what we're seeing this morning is we're seeing some dollar strength as risk aversion's kind of setting in. I just want to show you the euro here. We're looking at this on daily chart. Euro's had a nice run up to 140, all right? And I've just run a little Fibonacci retracement here. If the Fed does back away from quantitative easing, then I think we're going to see some dollar short covering. Okay, the market right now is expecting that this is going to happen. So what that's going to do is that's going to flood the market with liquidity, which is going to allow the market sort of catch up with the way that they've grown. Now, stocks have been on a tear, commodities, you name it. But what I think we're going to see is that if they do back away from the easing, we're going to see the short covering in the dollar, which means we're going to see some selling here in the euro. Now you can see 140 was a level that law of round numbers just kind of picked it right off. But you can see that we could expect a pullback to around 135, which is the first 23.6 Fibonacci retracement level if this should occur. So that's what I'm looking at on euro. Okay, we can also look at Aussie. Aussie's getting very close to parity with the dollar. I don't think that's going to happen. So all of these things have sort of been on this collision course, and we just came off this G7 meeting where, we're sort of chastising the Chinese for their currency manipulation. If you think about it, quantitative easing is a form of manipulation as well. So I'm guessing that it's not going to happen, but you never know. It just may happen and things reverse. So as you can see here in the market, we've got euro lower. The only thing I wanted to point out that was a little bit odd was we have actually the Kiwi dollar higher. I'll just show you this on the 15-minute chart. Not sure what this is all about. I was looking around for some news, didn't really see anything. So, when in doubt, I just tend to blame China, They're probably just moving their cash into somewhere else. And then we can also look at dollar versus loonie. Okay, we're also seeing the loonie gaining some strength here, dollar coming back against the loonie as well. So that's kind of what we're looking at. Now, getting back to the euro real quick, overnight CPI figures in Germany came in as expected. So, you can expect the ECB to stay on the sidelines. And then real quick, just take a look at the pound. Okay, pound is lower. They had some house price sales came in lower than expected. CPI came in as expected, just above that 3% target band for the Bank of England. Okay, but you got a policymaker out this morning saying that, hey, you know what? We may need to ignore the inflation mandate that the BOE has, and we may need to focus more on, trying to stabilize the economy and get the recovery moving. So quantitative easing for the UK may not be off the table as of right now. All right, so that's sort of what we're looking at. Lastly, just look at dollar yen potentially setting in a double bottom right here, which could mean we're going to see some dollar strength versus yen here. Prime Minister Noda came out and said that they're prepared to take bold action if they reach another 15-year high. So, who knows what's going to happen with that. So anyway, the games began at 2:15 Eastern Standard Time with the FOMC. All right, my initial gut feeling is that they're going to back away from quantitative easing and make no policy changes. Perhaps we'll hear some dovish comments, but I think that's going to send dollar strengthening and markets a little bit lower. If you think about it, the problem here in the U.S. isn't a lack of liquidity. There's plenty of money out there, and it's very cheap right now. It's that people don't want to borrow, all right? And people don't want to borrow because they don't want to expand their balance sheets because they're not certain what tomorrow is going to hold. And if you look at the current policies that are coming out of Washington, D.C. today, all right, people see them as very anti-business. So, would you be looking to expand business into an anti-business climate? No, of course not, and neither would I. So that's really what the problem is here. It's not that we have a lack of liquidity in the markets. It's that there's no confidence, and I think that confidence issue is going to be settled in the November elections when those come. But in the meantime, I don't expect that this quantitative easing is going to go through. So that's what I'm looking at today. Keep your eyes at 215. It's going to be lots of volatility, and just remember that regardless of what your bias may be or what you think, just trade what you see and not what you think should happen. So that's what I've got today. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.